Sinking funds are one of the simplest, yet most effective money tools for saving toward big goals without feeling overwhelmed. And once you understand how they work, they can completely change the way you handle expenses. A sinking fund is basically money you set aside regularly for a specific future expense, instead of waiting until the last minute and feeling stressed when the bill arrives. Unlike an emergency fund, which is meant for unexpected situations, sinking funds are for planned or predictable costs, such as holidays, car repairs, education fees, weddings, home improvements, or even annual bills like insurance and taxes. The idea is simple. You break a large future cost into smaller, manageable monthly amounts, which makes saving feel easier and more realistic. For example, if you know you'll need a large sum in a year's time, instead of panicking when the expense appears, you save a small amount every month, allowing the money to build gradually. This approach removes financial shocks and helps you stay in control of your cash flow. One of the biggest benefits of sinking funds is reduced stress because you're no longer reacting to expenses. You're preparing for them. When the time comes to spend the money, you already know it's there. You don't have to rely on credit cards, loans, or last-minute borrowing. Sinking funds also support better budgeting, as they make your future expenses visible in the present, helping you plan your income more realistically. Another advantage is flexibility, because you can create multiple sinking funds at the same time, each with its own purpose, whether that's travel, technology upgrades, gifts, or long-term personal goals. You don't need separate bank accounts for each fund. You can track them digitally, in a spreadsheet, or through budgeting apps that allow you to label and allocate savings. From a psychological point of view, sinking funds make saving feel rewarding rather than restrictive, because you can clearly see what your money is working toward. They also help prevent overspending, since money already assigned to a goal is less likely to be used impulsively. However, it's important to remember that sinking funds are best suited for short to medium-term goals, not long-term investing. Money in sinking funds should usually be kept in safe, easily accessible places like high-interest savings accounts or cash ISAs, rather than being exposed to market risk. This ensures the money is available when needed and not affected by market fluctuations. Sinking funds work especially well for people who feel anxious about money or struggle with irregular expenses, because they replace uncertainty with structure and clarity. Over time, they build confidence as you realize that big goals are achievable when broken into small, consistent actions. The key to success with sinking funds is consistency, not perfection. Even small contributions add up when given time. In simple terms, sinking funds turn big, stressful expenses into planned, manageable steps, allowing you to enjoy your goals without financial pressure.